Hello everyone and welcome back to Southern Wild. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that a like and subscribe. I was not even to record today, but I thought it was important because few things happened on the downside that I was not expecting, but I think it's important to cover. So that's what I'll do today. So TLT seems to be stabilizing a little bit and rising. That's important. Let's hope they can make clear triple bottom here on the bond market to bring more stability to the markets. Stocks across the board have pretty much put in a bounce day across, pretty much in the entirety of the asset classes. We've seen some strong bounces. The preferred inflation metric by the Fed, which is the PCE, came better than expected. So inflation was lower than the expectations, which is obviously good. It increases the odds of having more than 2 rate cuts. You see, there's an important distinction to be made here. There's on one side what the Fed says, which is 2 rate cuts. Then there's the reality, which is based on numbers. The thing that is important to understand when you're looking at market volatility, particularly when you have extreme volatility like the one we've had the past few days, is that for the time being, there is no solution but debasing the currency. The growth is not enough. The deficits keep piling in. The US and the rest of the world in general cannot afford higher interest rates. Now, if the inflation numbers are high, they are high. Do you want me to solve not me, but do you want the Fed to solve the inflation problem in the US? Here it is. We've updated our new model. Our models were outdated. They were focusing on the 20th century economy. We have now updated those models for the 21st heavy tech-based economy, particularly with AI tools and whatever. And the models have concluded that the ideal inflation is not 2% per year, it's 3 to 3.5. That's it. No more inflation problem. See how easy it is? Or there's 2 or 3 items that are causing the inflation to show higher numbers. Let's just remove them from the calculation. Ta-da! Like coffee a while ago, remember? When coffee was very expensive and was pushing the CPI higher. So they said, yeah, we're just going to remove it from the calculation. That's it. Problem solved. Obviously not the problem solved in the real people's lives, but problem solved for the financial markets. The vast majority of trading on a daily basis happens by machines. It's not people on the phone, sell me this, buy me that, like you see in the old movies. It's actually all automated, which means it's programmed to pick up certain headlines. So that's why if the headline is job market stronger than expected, the report can be completely terrible, meaning the jobs being created are all part-time, the jobs being created are all unproductive government jobs. We are losing full-time jobs left and right, which actually shows weakness. But the title, better jobs, less rate cuts, higher yields, gold goes down, bonds go down, blah, blah, blah. So it doesn't matter that me and you know the reality behind the scenes. What matters is how the market reacts to it. I've said this 100 times by now, but I'll say it again. We are in the part of the crypto market where the moves are much faster, the corrections are very deep, strong, and painful, and the recoveries are also very quick. So Ethereum, as you guys know, I like Ethereum. One of the main reasons is everybody hates it. Ethereum went to numbers that I really didn't expect. So I thought that 3370 or so was going to be the stop. But we actually went to around 3093, which is around the 200-day moving average and the 50-week moving average, which makes sense since a year has about 200 trading days and a year has about 52 weeks. So it's normal that these numbers are a bit similar. But basically, we just retested 2 key, very important moving averages, the most important ones. Did I think we're going to go as down as the 200-day? No, I didn't. Why didn't I think that? I didn't think that the market was going to give the opportunity for a lot of Johnny-come-latelys to come into the market after not being here during the bear market. See what I mean? I didn't think that the market would give the chance to people who didn't have the conviction to, okay, it's like, imagine the buzz, right? It's like, I thought that the buzz had gone and wouldn't go back to pick up a few people. See what I mean? This is like a bus going, it's on its way to whatever destination. Some people got late to the bus station, and the bus goes around the roundabout and picks those people up and then continues on its path. That part I was not expecting. However, I was very encouraged to see that as soon as we touched the 200 moving average, we spiked pretty much almost $500 from there, which is a massive reversal, a massive move to the upside, a massive recovery. I think it's very likely that Ethereum has seen its bottom in this correction. Once again, it was very helpful. This corrective period was very helpful. Basically, we were at extreme greed, and now we are very close, somewhere between neutral and fear. The last time that we were in fear was around September 2024, or even August 2024, and no, I think beginning of September 2024, and August as well, when we had the Japanese debacle. Both cases, Bitcoin rallied substantially from there. Will we gonna get the same thing now? I don't know. If you ask me probability, yes. By the way, this is very important. Whenever I make any kind of predictions, whenever I make any kind of statements like the one that I just made, I think Ethereum has made its bottom in this correction. You need to understand that these are probabilities. If somebody comes to you on YouTube or somewhere else, Telegram, X, whatever, and tells you, I'm 99% accurate on this, or I can guarantee you that somehow is going to be a scam. That will carry some type of VIP groups where you're going to get some special signals in which you're going to get completely annihilated. Basically, that's the point of that. So that's why I don't pretend that I get everything right. Did I know about the 200-day moving average for Ethereum? Of course I knew. Did I think we're going to get there? No, that's why I didn't talk about it. But I come here and I tell you I didn't think we're going to get as low as that, because I didn't think the market would give one last opportunity to all these Johnny-come-latelys to come and play. That part I didn't know. By the way, I think that Jim Cramer also turned bearish, which is very good. Those are the type of things that you want to hear, and things that you want to see for the cycle. By the way, just to put the things a little bit into perspective, when Ethereum and Bitcoin dropped like they dropped today, this morning, or during the night, depending on where you live, what we've done is basically go back to a month ago price. That's it. We crashed into a month ago price. This is the problem. You see, I talked about this so many times before. I know that my older followers will get completely bored to that for me to say this, but I'll just say it for the new ones. I said here, you're gonna see one day Bitcoin above 90K, and everybody's gonna be very, very happy. And then you're also gonna see Bitcoin above 100K, and everybody's gonna get really, really happy. And within a short time frame, you're gonna see Bitcoin go back to above 90 and above 100, and people gonna get bearish. They say, what? What are you talking about? I said, yeah. Because Bitcoin was at 85K. So when I said, you're gonna see Bitcoin above 90 and 100, and you're gonna be very happy. But remember this, in a short time frame, Bitcoin's gonna go back to those prices, and everybody's gonna feel bearish, and they will forget completely how bullish they feel right now if prices would go above 90. See what I mean? And here we are. Now, as I've said, why do we have, now this is important for people who maybe have not seen this so many times, so I'm going to repeat a little bit here, but why in this stage of the cycle do we have these big corrections, which are very fast, very painful, very short dated? Well, number one, this is the reason why I call this part of the cycle the most dangerous. Why? Because you can see Ethereum at 3,100 and you start thinking that it's going to go below 3,000. You cannot pull the trigger, and before you notice, you go, I'm going to go to sleep, or I'm going to go to work, I'm going to go to the gym. You come back home and Ethereum is at 3,500. So what the hell just happened, right? You get, oh my God. Yes, you get left behind that easy. In the morning, Andy was at 175 million market cap. By now, it's 230 million. Many people missed that recovery part. So, by the way, shout out to Boppy, because Boppy has been one of the communities that has held the strongest. I think that community is very, very strong. You can barely tell that there was a correction because they're back to 1.6 million market cap. So congratulations on that. You're a resilient group of people. I can tell that you guys are a complete bunch of degenerates. And I say that in a complimentary way. You need to be a bunch of degenerates. You need to be a cult. You need to believe in something. If you don't believe, this is what's going to happen, which is now I'm going to talk why at this stage of the cycle we see these corrections so aggressive. Number one, this is filled with non-believers that came from the stock market or someplace else, and they put large amounts, I'm talking 100K plus, into crypto for the first time. These are people that come from the stock market, and believe me, I have a lot of people sending me messages that are like this. They cannot take 30% corrections in 2 days. This is outside of their understanding of finance. You need to understand, they grew up in a phase where maybe they had 2 negative years in 15 years of stock market. So they don't understand. And when I say negative years, it's like 2022, 25% down. So in the full year, right? So 2% so 30% in 2 days is something that doesn't fit their mindset. Number two are the people who wanted to bypass the pain of a bear market and they want to come a little bit later, and they put huge amounts of leverage to compensate the returns that they didn't have by buying when FTX went bankrupt, for example, right? So they need to compensate and they go all in with leverage. And then they need to be taken out before we can move forward. So the way that you move forward is if people put a lot of short positions, because you need to force them to close those positions. The way that we also move forward is to have deep, strong, fast corrections to get rid of the leveraged longs on this side. So you need both sides of the equation for the market to grow healthily with people that actually believe, and not people that are Johnny-come-latelys or people that are trying to rig the system with leverage. They need to be punished. Number three, as I've said before, and I think Somi has mentioned this many times, this is the cycle of the non-believers. This is the cycle of the PTSD people. You see, you need to understand, the people that are here for more than 3 years are people that came from 2020, 2021 cycle. They remember how important the narrative was during those time periods. And they made a promise to themselves, which is, I'm not going to round trip my bags. Instead of comparing this cycle to 2016, 2017, they are comparing it to 2020, 2021. Because a lot of altcoins peaked in May of 2021, so 12 months after the Bitcoin halving, they are getting ready to start selling in January, February, and March. This is why I think there's going to be a second altcoin season, because these people need to get rid. So these people need to be thrown out. And then we have a real, very strong altcoin season closer to the end of the year to punish these people that didn't believe and left early. This is, I think, what we need. But the problem is when you see a correction this fast, they start thinking, oh, maybe we're not going to have the pumps in the first quarter of 2025, so I better sell now. So you get rid of the people that come from the stock market, non-believers, Johnny-come-latelys, the FOMO buyers. You get rid of the people that try to rig the system with super leverage so they wouldn't suffer the bear market. Number three, the people with PTSD, they want to get away from it. that they want to get away of the crypto market as soon as possible, because they remember very well the pain they suffered between 2021 and today. So those are the three people that you don't want to come with you into the ride of the bull market. You want them out now. So the same way that what Powell said removed a level of perfection from the market, other things can add levels of perfection to the market. Example, what if we are in February 2025 and a certain conflict in Europe becomes peaceful? What will that do to markets? What if certain conflicts in the Middle East get solved? What will that do to markets? What if Russia, China, Saudi, the US start creating strategic reserves? What will that do to markets? What if they sign a certain deal with a nation that used to be called Persia for basically promising never to develop certain types of weapons that destroy large amounts of land and people with it? What will that do to price? You see, you need to also, don't think only about black swans, think about the other side. What if these things come to pass? What if a certain orange man signs an executive order on the 21st of January about a certain strategic reserve to be kickstarted in 2025? What if? See what I mean? You can play this game to both sides of the equation. So people shouldn't be overly dismissive. And by the way, the issue is what I've said. Their only chance is to debase the currency. Other fundamentals that happened this week. The Swedish central bank cut rates. More global liquidity. It gets lost in the middle of the noise, right? They need to cut rates because if they don't, by January 2026, 1 year after Trump's inauguration, the number one item in the budget will not be Social Security, will not be Medicare, will not be the military. It will be interest expense. Not the principal, not repaying the debt, just the interest. And by 2027, it will be double that value. And by 2020, you get the point, right? If you would leave rates as they are for another 10 years, by 2034, the interest expense on the national debt of the US, assuming no recessions, by the way, just the interest rate expense would be close to $12 trillion per year, which is basically almost 3 times the entire tax revenue of the US. Will that happen? No. So they'll push the rates to zero. And whatever they need to do they need to recalculate the way they use the way they calculate inflation? They will do it. Do they need to change the way that they will calculate what is the appropriate target for inflation? They will change it. Whatever needs to happen, but this house of cards here cannot change. Why? Because the number one people that get destroyed, the first people that get destroyed are the banks. Because the banks hold all this debt. So if yields go through the roof, all the collateral that the banks hold, all the safety that they have, poof, becomes thin air. And Federal Reserve, ECB, BOJ, BOE are central banks. They are not central defenders of people like you and me. They are central banks. They protect the banks. Not me, not you, the commercial banks. Not inflation, not the job market. No, they protect banks. Period. That's why they're called a central bank. Now, I would like, how will the cycle end? The cycle will end, and the way that we get the blow off top is when something so good starts to happen, or a series of events that are so positive, like the ones that I just described, start to happen, and people change their mind about the 4-year cycle. So they will say, the 4-year cycle is broken, and we won't get the bear market because of insert narrative. 2014, we're not going to have a bear market in 2014 because we will replace Visa, MasterCard, and currency across the globe, currency payments across the globe. Wrong, we had a bear market 2014. 2018, we have the futures in Bitcoin, now the ETFs are coming, the industry is getting legitimized. We're not going to have a bear market. 2018, bear market. 2021, we have 0% interest rates, infinite QE, and we have DeFi. Now we can stay in the system. We no longer need to cash out into the fiat world, into the dollars and the euros. We can stay in the system because we have DeFi, we have infinite QE, and we have 0% interest rates. Wrong. Bear market 2022. What's going to be the narrative this time? Trump likes it, governments love it, governments are buying, institutions are buying. This will be part of the Roth, the IRAs, and so on. So this time around, we won't have a bear market because of that. That's going to be the narrative, I think. I mean, it's going to be easier to tell in 2025, but I get the feeling that that's going to be the narrative. Finally, 7G came out, as you guys know. It's a coin developed by my fellow YouTuber, Crypto7. The launch was successful. I think it went up as much as 12, 13, 14x, at least from what I invested in the beginning. Now it has its natural pullback, particularly the market conditions have not been the greatest. So congratulations to him. Let's hope it goes well. As you guys know, I have a lottery ticket in a separate wallet on that. If I see a certain return that I have in mind, I will sell my principal plus a little bit of profit. I know he's going to be upset at me, but that's my rules for lottery tickets. I do it for all of them, not just for 7G. This is not special treatment for 7G. Actually, my special treatment for 7G was my lottery ticket was a little bit larger than it normally is. So that's already a bit of a special treatment, if you will. So I wish him all the best. I hope that everything goes well and that the whole thing goes up 1,000-fold, a 1,000,000-fold. The more, the better for me. So you go for it. You make it happen. I'm going to be extremely, extremely happy. Kind reminder on something, and I saw your friend saw me covering this, so I heavily advise you to go there. Aptos. The CEO and one of the founders announced that he left Aptos as soon as he got his last tokens. He made $400-500 million in a coin that has been sideways for 2 years. So he made his money. He left as soon as he could leave. As soon as he sold his last token, bye. I'm out. I don't give a shit. I don't give a crap anymore. And that's why I like Pulse Chain, because there's no VCs, there's no founders that disappear. Actually, the founder buys his own coins. There's no vesting of tokens. There's no tokens being released to the market. And I hope that this serves as a lesson. Congratulations to him. He now has $400-500 million. Take your pick. And the market cap has gone up 12-fold. And the price is sideways. That means the amount of money that's been pouring out, the number of tokens, because market cap is circulating supply times the price. For the market cap to go up 12-fold without the pricing really moving that much, once again, the insiders and the VCs made a lot of money, and retail didn't. Once again, at least, maybe Pulse Chain is not going to be successful, but at least I know the full story on that one. And with that, thank you very much, guys. We are in the holiday season. I will still try to record Sunday, probably Monday, but then probably next week not so much. So I apologize in advance for it. I will still try to come here and make, even if a little bit of a short video. In any case, I encourage you not to watch my videos during that week. I encourage you to spend some time with your family, have some fun, spend some time with your friends, watch some NFL on Netflix. You do whatever you want to do, have some fun, and then in January you can come and watch my videos again. And with that, guys, thank you very much for your support. I wish you enjoy the weekend. Don't forget, like and subscribe is the only thing that I ask. If you think I'm an idiot and you want to insult me in the comment section, feel free to do so as well. Thank you very much, guys, and I'll catch you in the next one.